What's up, friends? My name is Sophia Suarez, and welcome to another episode of my favorite topic, Upworthy investments that will change the world. Today, we will be talking about Microsoft. We'll be taking a closer look at Microsoft's sustainability environmental report, as well as talk about some of the new ESG initiatives that the company is undertaking. We will also discuss future catalysts for growth, as well as look at key metrics and fundamentals to see where the stock will be going and whether now is a good time to invest. Stay with me to the end, and I will give you 5 more software stocks to consider for your sustainable investment portfolio. If you want an informed opinion and timely updates on Microsoft, be sure to hit that subscribe button below. Just a reminder before we get started that I am not a financial advisor, so everything that I say in this video are just for educational purposes. Microsoft is the world's largest software company and a dominant cloud platform provider. It has strong growing subscription revenue from its software products. The company is also the number 2 leader in cloud computing with its Azure platform. Azure's success and Microsoft's active acquisition pipeline should support strong future growth. But investors aren't nearly as excited about Microsoft stock as they were in previous phases of the pandemic. Shares are down 27% year to date and may have further room to slide as the market fears of a major slowdown ahead. But that's exactly why we're talking about Microsoft now, because if you were to zoom out and consider a larger 5-year horizon as opposed to next month, there are so many reasons to like Microsoft, especially if you are an ESG stock investor like me. Wait, ESG, every silly goat? No. ESG stands for Environment, Social, Governance. To put it simply, they are stocks that are financially strong, investable companies that are committed to making the world a better place while generating a robust returns for shareholders. Wow, doing good and making money? That's right. To qualify as a good ESG stock, the company must ensure that its operations are benefiting the environment, employees, local communities, and shareholders. Solid financial performance is a must-have, and there are several ESG rating agencies that will verify this information and give us ratings that will be indicative of the high standards for corporate behavior. Okay, so back to Microsoft. Microsoft earned its status as a prominent ESG company for its leadership in energy conservation. The company has been carbon neutral across the world since 2012 and commits to being carbon negative by 2030. Microsoft is also committed to a water positive future where it aims to reduce water waste in its data center operations by 95% by 2024. At its most recently opened new data center region, it uses zero water for cooling, but it relies on air to keep data centers cool. It's pretty safe to say that Microsoft is pretty dedicated to ESG initiatives and not just greenwashing its operations. Now let's turn to waste. Microsoft is committed to being zero waste by 2030 by reducing, reusing, and diverting waste in its campuses and data centers. One way they are trying to achieve that is through the design and implementation of circular centers. To put it simply, it's where Microsoft reuse and repurpose decommissioned cloud computing hardware as resources for training programs. Microsoft is also committed to building sustainable devices. For example, the Ocean Plastic Mouse is a small step forward in Microsoft's sustainability journey. The shell of this eco-friendly mouse is made with 20% recycled ocean plastic. This recycled ocean plastic is made from plastic waste that is recovered from oceans and waterways, cleaned and processed into recyclable plastic resin pellets. These recycled pellets are blended in during the materials development process that makes the shell of the ocean plastic mouse. Another ESG initiative Microsoft did last year is undertaking the building of a planetary computer. This is a platform that will access trillions of data points collected by people like you and me, and by machines in space, in the sky, in the ground, and in the water. One that will allow users to search by geographic location instead of keywords. Now let's pivot and look at some of Microsoft's key metrics. Although Microsoft's most recent quarterly earnings per share of EPS of $2.23 fell short of Wall Street's consensus bottom line estimate by -3%. This was driven by certain non-recurring items, such as the decision to scale down operations in Russia, employee severance, and the impact from the Xandr acquisition. Looking beyond the headline of EPS miss, Microsoft's performance was reasonably good. Firstly, Microsoft achieved a 46% year-over-year revenue growth for Azure and other cloud services in Q4 fiscal year 2022. This is faster than the 45% year-over-year top-line increase that Microsoft delivered for Q4 fiscal year 2021. More critically, Microsoft mentioned at its recent quarterly investor call that it observed larger and longer-term commitments for Azure, which bodes well for this business line's long-term growth outlook. Secondly, the company's Office 365 commercial product line witnessed a strong 19% year-over-year revenue growth. The key driver was Office 365 E5, which Microsoft describes as a cloud-based suite of productivity apps combined with advanced voice, analytics, security, and compliance services. Specifically, the number of Office 365 E5 increased in excess of 60% year-over-year in the recent quarter to account for 12% of the installed base for Office 365. In terms of fundamentals, again, it's very strong. Microsoft has a return on assets of 19%. This is amongst the best returns in the industry. Microsoft outperforms 96% of its industry peers. Microsoft has a profit margin of 36%. This is also amongst the best returns in the industry, as the industry average is about minus 19%. So therefore, Microsoft outperforms 97% of its industry peers. Microsoft's return on equity of 43% is amongst the best returns of the industry. Microsoft outperforms 88% of its industry peers. The industry average return on equity is only about 12%. Currently, as the making of this video, shares are trading at 26.5 times earnings, a slight discount compared to the 3-year average of 32 times earnings, suggesting that the stock is a good spot to buy. It makes sense to avoid some companies in tough selling environment as we are in now, especially if they rely on debt or don't have a proven business model. Software businesses with declining market shares are risky today too. But Microsoft has none of those weaknesses. It is positioned to lead in several areas that should see strong growth over the next decade. And it has the financial resources to weather an industry recession should one develop. Now, I think Microsoft is a great stock to hold long-term in your portfolio. What do you think? Do you like Microsoft? Are you aware and excited about some of the green initiatives the company is taking? Leave your comment below and let me know, and we can discuss. All right, friends. I hope you found this video interesting and helpful. Thanks for making it to the end. As promised, here are 5 other software companies that I think you may also consider for your portfolio. Check it out. If you'd like me to analyze any of these companies, please like and leave a comment and let me know. In the meantime, do good and make money. We'll catch you next time.